Okay, so you know how everyone's always talking about these like giant fashion e-commerce sites?
Mm.
The ones that kind of seem like they've figured out the whole selling clothes online thing?
Yeah.
Well, the whole thing with Farfetch recently has been like a wake-up call, you know?
Yeah.
I mean, one minute they're valued at like $24 billion,
Yeah.
and like not that long after, they're getting bought for something like $500 million.
Right.
That's not just a little dip that's like a full-on crash.
Yeah.
It really makes you wonder, like, what's actually going on in online fashion?
Yeah, it's a pretty dramatic sign that things are maybe not as simple as they seem.
Yeah.
Even in a sector with a lot of growth on the surface, fashion e-commerce is a really complex business.
Yeah?
Farfetch's journey is like a case study. It went from being like a disruptor everyone was excited about to basically a shadow of its former self.
Totally. And that's why we're doing this deep dive.
Yeah.
It's not just about, like, gossiping about Farfetch's troubles.
Right.
We want to figure out, like, the bigger picture of how healthy fashion e-commerce really is.
Mm-hmm.
And by looking at what happened to Farfetch, but also, like, all the other trends that are happening in the industry, the stuff you've been telling us about, we can get a better understanding of what's really important.
Right. We want to cut through all the noise and get to the core of what's going on. We've looked at a lot of different stuff.
Yeah.
Like in-depth analyses of the whole fashion e-commerce sector,
Mm-hmm.
news reports about how different companies are doing. And like we've seen some pretty stark examples of companies that are really struggling.
Yeah.
So today we're going to try to figure out, are Farfetch's problems a sign of a bigger problem? Like, is there something fundamentally wrong with fashion e-commerce?
Right.
And we want to understand the biggest challenges and also the potential future of selling fashion online.
And speaking of, like, figuring out the future of fashion,
Yeah.
this is an episode of The Fashion Algorithm.
That's right.
And we're brought to you by Cloudfit.ai.
Yes.
And they're doing something really cool. They're connecting all those awesome influencer outfits you see online directly to the product inventory. So imagine, like, you see an influencer you love. You're like, oh, I love that outfit. You click on it and bam, you can buy those exact same pieces.
Yeah, it's so smart.
That's what Cloudfit.ai does.
Yeah.
They're driving more sales and boosting those average order values for brands.
That's right.
You can find out more by visiting Cloudfit.ai.
Yeah, and that's spelled CLOUTFIT.ai.
So now let's really get into this whole Farfetch thing. That valuation swing, we're talking a $23.5 billion drop.
Yeah, huge.
It's got to mean that there were some deep problems there. It wasn't just like a little oopsie. There was a total collapse in how the market saw their business.
Totally agree. And one of the first things that really jumps out when you look at Farfetch is how much trouble they had getting the really big, like, top-tier luxury brands onto their platform. You know, those iconic names like LVMH, Hermes.
Yeah,
They seemed really reluctant to sell through Farfetch.
right. It makes you wonder, like, why?
Well, for those brands, control is everything.
Yeah.
They put so much effort and money into building their brand image. They want to be in charge of the whole customer experience.
Yeah.
And that's why they really prefer to steer customers towards their own channels,
Right.
like their own flagship stores or their own really slick websites.
It makes sense when you think about how long they've spent building this image of exclusivity.
Yeah,
Why would they want to share the spotlight with a bunch of other brands on someone else's platform?
exactly. It's not really their vibe.
No. Plus, I read that Farfetch was taking like a 30% commission.
Oh, wow.
And for those top brands that have customers practically begging to buy their stuff,
Yeah,
that probably felt like a totally unnecessary expense.
absolutely. Why would they give up that much when they don't have to?
Right, exactly. Plus, luxury brands really, really hate discounting.
Mm-hmm.
They think it cheapens their brand and like hurts how people see them in the long run.
Right.
And Farfetch was often using discounts to boost sales, especially for stuff that wasn't selling so well.
Yeah.
So you have this clash of philosophies right there.
Totally.
Luxury wants exclusivity and high prices, and Farfetch is trying to move inventory and get those sales numbers up.
Yeah.
So if they weren't getting the big names, where were they getting all their high-end stuff?
Well, it seems like they were relying more on smaller boutiques, independent ones.
Oh, interesting.
And from what I've read, those boutiques often used Farfetch as a way to get rid of inventory that wasn't selling well for them.
Oh, so like the stuff that's been sitting around for a while.
Exactly. So if you were, a shopper on Farfetch looking for the absolute latest, hottest runway pieces from the big designers,
Yeah.
you might not always find them there. And this really shows how the relationships between platforms and brands can impact what you, the listener, can actually find online.
Right. So it's not just about going to any luxury site and expecting to find the same things.
Yeah, the availability of those really exclusive items is gonna vary.
It's more complicated than it looks on the surface.
Yeah, totally. And this reliance on smaller brands and like sometimes less in-demand items probably led to another problem.
What's that?
The need for Farfetch to offer discounts all the time.
Yeah, it sounds like they got stuck in a cycle.
They did.
They didn't always have the most sought-after stuff. They wanted to keep those sales numbers going up, so they kept offering discounts.
Mm-hmm.
But like we said, that goes against everything those luxury brands want.
Totally. It creates a weird image problem, right?
Totally.
If you're always seeing luxury items on sale, you start to wonder if they're really that luxurious.
Exactly. And maybe you start expecting a discount and won't buy unless it's on sale.
Exactly. It can really erode the perceived value of the brand.
So let's look at the money side of things for a sec.
Mm-hmm.
Farfetch was making a lot of revenue. $2.2 billion in sales in 2021.
Yeah, that's not small potatoes.
No, but their gross profit margin was under 50%. And for a marketplace model, where they're basically taking a cut of other people's sales, that seems kind of thin.
Yeah, definitely on the lower side.
So let's break down that gross profit margin. What was squeezing it?
Well, a few things. Around 15% of their revenue was coming from shipping, which they mostly outsourced and offered at close to cost, so very little profit there.
Okay.
Then about 10% of their sales were from their own brands.
Oh, right. The brands they acquired.
Exactly, like New Guards Group.
Mm-hmm.
Now they got the full sale price as revenue there, but the profit margin on actually making and selling clothes is usually lower than just taking a commission on someone else's sale.
Okay, so that brings the overall percentage down.
Right. Then they also had big expenses for customer service, handling returns, which we all know can be a lot with online clothes shopping, and just the general costs of running a global network to get those clothes to people.
So even after all those sales, the actual profit they were making was less than half of what they brought in.
Yeah.
And then a huge chunk of that, like almost a third, went into marketing. Why were they spending so much on advertising?
That high marketing spend is probably because it's hard to keep customers coming back when you don't consistently have the hottest brands.
Yeah.
If people can't find what they really want, they're going to go somewhere else, which means you need to keep spending more and more to attract new buyers. On top of that, they had almost $600 million in general and administrative costs, just the overhead of running a big, complicated organization.
So big numbers coming in, but also huge costs behind the scenes.
Right.
And it sounds like their growth wasn't really sustainable either.
It wasn't. Revenue growth slowed down a lot in 2022, and then in the first half of 2023, they actually saw their first revenue decline.
Oh, wow.
They were hoping to become profitable in 2023,
Mm-hmm.
like achieve positive adjusted EBITDA, that's earnings before interest, taxes, depreciation, and amortization, and positive free cash flow. But they didn't get there, and they had over $500 million in debt.
Oh, wow.
So when they were bought by Coupang, the original shareholders probably got very little, if anything.
It's tough.
The main takeaway is that their operating expenses, especially marketing and administration, were just too high.
Yeah.
And their gross profit margin wasn't strong enough to support their business model. So even with impressive sales numbers, it was really hard for them to become consistently profitable.
Yeah, it shows there were some fundamental problems in how they were set up.
Yeah, definitely. And it wasn't just about the numbers.
No.
There were also strategic decisions
Mm-hmm.
and even allegations of mismanagement that seemed to have played a role.
Like what?
Well, there was this idea that Farfetch could be like the Amazon of luxury, which seems like a flawed comparison.
How so?
The luxury market is just different. It's not about being the biggest or having the most stuff.
Yeah.
It's about exclusivity and personalized experience.
Right.
A different kind of customer relationship than what Amazon is known for.
Yeah.
And their marketplace model meant that they were kind of competing with their own suppliers.
Those independent boutiques.
Yeah.
How so?
As it got easier for those boutiques to set up their own online stores, using platforms like Shopify, they didn't need Farfetch as much.
Right. They could go directly to the customers themselves.
Exactly. And the big luxury brands were also focusing on building their own retail networks, both online and offline.
So it was like Farfetch was caught in the middle.
Yeah, kind of. Competing with the brands that supplied them and the technology that let those brands do their own thing.
That's a tough spot to be in.
It is. And then there are the allegations of bad decisions and poor management, like the petition from creditors to wind up the company in the Cayman Islands.
Oh, wow.
Claims that the acquisition benefited the founder more than other stakeholders,
Mm.
and class action lawsuits saying they misled investors and inflated their valuation.
So a lot of serious accusations there.
It was a messy situation.
Now, what about COVID? We know a lot of online businesses got a boost when physical stores were closed.
Right.
Did Farfetch benefit from that?
Definitely. They saw a temporary sales jump during the pandemic.
Hmm.
When brick-and-mortar stores were mostly closed, they even reported their first profit in late 2021.
Oh, wow. So they actually became profitable.
For a bit, yeah. But some analysts think that it might have just delayed the inevitable.
Maybe.
Without that pandemic bump, they might have run into serious financial problems sooner. The pandemic masked some of their weaknesses, but it didn't fix the core problems with their sourcing, their cost structure, or their strategy.
So it was like a temporary fix, not a real solution.
Exactly.
So to sum up the Farfetch story, it wasn't just one thing that went wrong.
Right.
It was this combo of struggling to get those top luxury brands, then relying on discounts to sell stuff, having really high costs, experiencing slow growth, making some maybe questionable strategic decisions, and then facing all these allegations of bad management.
Yeah, that's a pretty good summary. It's definitely a story with lessons for anyone who's in fashion e-commerce.
Absolutely.
Yeah.
And one thing that's really important to remember is that Farfetch isn't alone in this.
Right.
We're seeing financial pressures in different parts of the fashion e-commerce world, which means these problems are probably more widespread.
They're not just isolated incidents.
Yeah, like what about Matches Fashion?
Matches Fashion, yeah, another big name in online luxury. They were recently bought by Frasier's Group and then almost immediately went into administration.
Which basically means they're insolvent, right?
Yeah, pretty much. And it happened really fast.
That's a pretty quick turnaround.
It is. And Frasier's Group said publicly that Matches Fashion wasn't hitting its sales targets and was losing a lot of money.
Oh, wow.
So they had to make a drastic move.
It sounds like they might have overextended themselves, kind of like Farfetch.
It's possible they might have had big expansion plans that led to high costs that they couldn't cover with their sales.
Right.
And bad inventory management, meaning they had to do big markdowns to get rid of unsold stuff, probably also hurt their profits.
It seems like it's really hard to make a sustainable profit in the luxury fashion world.
It's definitely a tough market, especially online.
Huh.
And it's not just the high-end brands that are having trouble.
What about fast fashion?
Yeah, think about Forever 21. They've filed for bankruptcy twice in the last 6 years.
Oh, wow, twice.
Yeah,
That really shows how tough the competition is in that part of the market.
it does.
Yeah.
Forever 21's problems highlight the rise of ultra-fast fashion brands like Temu and Shein.
The ones with the crazy low prices.
Exactly. They're putting huge pressure on the older, fast fashion companies like Forever 21. But it's not just about price.
What else is going on?
Their costs are rising, their main customers are being squeezed by the economy, and people are starting to care more about sustainability and quality.
Yeah, it seems like consumer preferences are changing.
They are. Plus, Forever 21's online business hasn't been as strong as their digital-only competitors, and they're still dealing with supply chain problems and the costs of all their physical stores.
It's like they're getting squeezed from all sides.
They are. It shows how hard it is for traditional retailers to adapt to the new online world.
And it sounds like even having a big presence in physical stores isn't a guarantee of success anymore.
Right. We're seeing that with Esprit Europe, GmbH, also facing insolvency.
Oh, really?
Yeah, after their subsidiaries in Belgium and Switzerland went bankrupt, Esprit Europe, GmbH, and some related companies in Germany started their own insolvency proceedings.
Wow.
The details are still coming out about the European arm of the business.
Right.
But the Belgian subsidiary specifically said that their costs were going up and they had cash flow problems.
So even big established brands are feeling the pressure.
They are. It seems like online competition, changing customer preferences, and the overall difficulties in retail are affecting everyone.
And you mentioned before that it's not just the big names, right?
Right. We've seen bankruptcies and administrations across the fashion and retail world.
Like,
Hudson's Bay Co., Dancing Leopard, New Guards Group, which owns brands like Off-White, Y Project, Rue 21, Express Inc.
wow, that's a lot of companies.
It is. And it's interesting that New Guards Group went bankrupt after their parent company was acquired by Farfetch.
Oh, really?
Yeah, it shows how financial problems can spread throughout the whole industry.
That's a good point.
The sheer number of struggling companies points to a tough economic climate and those big shifts in consumer behavior we talked about.
So it's not just about Farfetch's specific problems, it's a bigger trend.
Yeah, Farfetch's issues are a symptom of wider problems in both luxury and fast fashion.
So besides the issues with brands and business models, reaching potential customers online also seems to be a big hurdle.
Absolutely.
The reports you shared talk about this rising cost of customer acquisition.
Yeah, that's a big one. One of the biggest challenges for fashion e-commerce is that it's getting more and more expensive to get new customers online.
Why is that?
Well, a big part of it is the changes in digital advertising, especially Apple's App Tracking Transparency Policy, or ATT.
Oh, right. That came out in April 2021, right?
Yeah.
It was about giving users more control over their data
Yeah.
and making apps ask permission before tracking them across other apps and websites.
Exactly. And most people chose privacy. Opt-in rates for tracking went down to like 15–25%.
Oh, wow.
That had a huge impact on mobile advertising, making it way harder for fashion e-commerce to do those targeted ads that used to be so effective.
Right.
Platforms like Facebook, which a lot of companies use for retargeting potential customers,
Mm-hmm.
saw their ad campaigns become much less effective.
So it was harder to get your ads in front of the right people.
Exactly.
And even email marketing was affected, right?
Yeah, because of Apple's mail privacy protection, which messes with how open rates are measured.
Right.
So it's harder to know if your email campaigns are working.
So basically, fashion companies lost a lot of their ability to pinpoint their ideal customer and then track if their ads were actually working.
Pretty much. And the direct result was that digital advertising got a lot more expensive.
Like how much more expensive?
Yeah. Studies show that conversion costs went way up. One report mentioned a 200% increase in cost per acquisition for tracked users and a 155% increase for non-tracked users after the ATT update.
Oh, wow.
And a lot of businesses said they had to spend 30% to 100% more just to get one new customer.
That's huge.
Yeah. The cost per thousand impressions, or CPM, on platforms like Facebook also went up dramatically.
So they're paying more for advertising that might not even be working as well.
Right. Some sources even said ad prices went up 8 to 10 times, while the effectiveness of those ads went down.
That's brutal. Talk about a squeeze on profit margins.
Yeah, it's rough. There are estimates that iOS 14.5 alone is costing Meta, formerly Facebook, billions of dollars in ad revenue every year.
Wow.
And the cost to reach 1,000 users on Facebook has reportedly tripled in just 2 years.
So what are companies doing about it?
They're having to completely rethink their marketing. There's renewed interest in things like contextual advertising.
Which is?
It targets users based on what they're looking at online at that moment.
Oh, interesting.
And there's more focus on using first-party data to build direct relationships with customers.
Okay.
And the importance of creating really good, engaging content is bigger than ever.
Yeah, you got to stand out somehow.
Exactly. Some brands are even trying out TikTok or going back to old school methods like billboards and catalogs.
Wow, so it's a whole new world for marketing.
Pretty much. And it's especially hard for smaller businesses that don't have as much money to experiment with different strategies.
Right. They're the ones that rely the most on that precise targeting that digital advertising used to offer.
Exactly. Now they have to cast a wider net, which costs more and might not be as effective.
So Apple's privacy changes really shook things up.
They did. Customer acquisition costs went way up and businesses had to adapt.
And on top of the rising costs of getting new customers, there's also this constant pressure to offer discounts.
Yeah, that's a whole other issue.
You mentioned this discount treadmill earlier.
Right. Online shopping has kind of trained people to expect the lowest prices, which has led to intense price competition.
Yeah, it feels like everything is always on sale.
It does, doesn't it? You see constant promotions, flash sales, seasonal discounts. And the big players, like Amazon and Walmart, are in these price wars that set the bar for everyone else.
Right.
Even clothing retailers are doing more and more mid-season and Black Friday sales.
And there are those browser extensions that automatically find discounts for you.
Exactly. It's hard to avoid.
So why is everyone doing so much discounting?
Well, for businesses, it's a way to stand out, get rid of extra inventory, attract customers who are looking for deals, and just boost sales.
Makes sense.
But consumers are also driving this.
How so?
A lot of people wait to buy things knowing they'll eventually go on sale.
Yeah, I'm guilty of that too.
It's smart shopping, but all this discounting is definitely hurting profits.
It has to be.
It lowers the average price of your products, which means you need to sell way more to make the same profit.
Right.
And while big discounts can boost sales in the short term,
Like a 50% offset?
yeah, that'll get people buying. But relying on discounts all the time can backfire.
How so?
Customers get used to lower prices and might not buy anything unless it's on sale.
Right. It sets a certain expectation.
Exactly. In the long run, that can lead to lower profits even if you have those short-term sales bumps.
And I imagine it's not great for your brand image either.
You're right. If your stuff is always on sale, people might think it's not that good.
Right. Like maybe there's something wrong with it.
Exactly. Discounting can cheapen your brand in the eyes of the customer.
And you end up attracting customers who only care about the price, not your brand.
Exactly. It makes it harder to build loyalty.
So how can businesses escape this discount trap?
They need to focus on the whole customer experience, not just the price.
Like what kinds of things?
They can use minimum advertised price policies to keep prices consistent across different sellers.
Okay.
They can offer extra value, like warranties or bundles, to justify higher prices. They need a good discount strategy that considers timing and profit margins, not just constant markdowns.
Right, it has to be strategic.
Exactly. And rewarding loyal customers with special offers or early access to sales can build those long-term relationships.
So it's about shifting the focus from price to value.
Yeah, showing customers why your brand is worth paying for.
So with all these rising costs and the need to discount, it definitely sounds like fashion e-commerce is facing a profit squeeze. But the information we've looked at seems to suggest it's not quite that simple.
It's complex. While there's definitely pressure on profits from advertising costs and discounting, there's also a lot of potential for growth in fashion e-commerce.
Really?
Yeah, e-commerce is expected to keep growing as a share of total retail sales.
Interesting.
Plus, online businesses have certain advantages over physical stores, like lower overhead costs.
Right, they don't need to pay for rent and all that.
Exactly. And if businesses are smart about their marketing and make sure their product pages are optimized for sales, they can still make good profits.
There's hope then.
There is. And there's even data from 2023 showing growth in online apparel and accessory sales.
Well, that's encouraging.
Yeah. Plus, the average order value is going up, and projections for future market growth are still very strong.
Okay, so despite the challenges, the industry is still growing.
It is.
What are experts saying about staying profitable in this changing environment?
They all agree that managing costs is crucial, especially in areas like shipping and fulfillment. Setting realistic profit margin targets is important, too.
Like what would be a realistic target?
Say, around 20% for new businesses.
Okay.
Data from Shopify shows that most of their merchants become profitable within 2 years.
Oh, that's good to know.
But there's also awareness that rising costs in the supply chain and maybe lower consumer confidence because of the economy are creating a squeeze.
It's a lot to juggle.
It is. Success depends on strategic pricing, smart merchandising to sell higher margin items, and having efficient supply chains.
So even though margins are under pressure, there are ways to make a profit.
Absolutely.
It seems like the rising costs of advertising and discounting aren't the only obstacles in fashion e-commerce.
Right.
We've seen that there are other big challenges too.
Yeah, for sure. Supply chain problems are still a major issue for the fashion industry.
Why is that?
Geopolitical stuff, inflation, and climate change are causing a lot of instability in global supply chains.
Makes sense.
And a lot of fashion executives say it's their biggest challenge.
Wow.
It leads to higher costs, delays in getting products, and problems managing inventory.
So having a reliable and flexible supply chain is more important than ever.
Absolutely.
We had talked about this earlier, but customer behavior is always changing, which creates its own set of challenges.
Definitely. People are looking for better deals and sometimes switching to cheaper brands. There's more demand for sustainability and ethical practices, which is great.
Yeah.
And the rise of dupes, those cheaper versions of luxury goods, is challenging those high-end brands.
It's interesting how that's changing things.
It is. And then there's the growing importance of social commerce.
Right. People buying things directly through social media.
Exactly. And mobile shopping is still huge. So businesses need to keep adapting their products, marketing, and sales channels.
It's a fast-moving world.
It is.
And we can't forget about returns. They're a big issue for fashion e-commerce.
You're right. High return rates because of things like inconsistent sizing, products looking different online versus in person, and easy return policies create a lot of costs. Logistics, restocking, and sometimes even disposing of return items.
Right.
All of that hurts profits and makes things more complicated.
So what about just the everyday operations of running an online fashion business?
Yeah,
Are there specific inefficiencies that can really cost a lot?
for sure. Managing inventory with all those different sizes, colors, and styles is a big challenge.
Yeah, I can imagine.
And coordinating promotions across all your sales channels, online and offline, is tricky. Making sure orders are fulfilled quickly and accurately is crucial for keeping customers happy. And creating a seamless omnichannel experience where customers can interact with your brand anywhere is becoming the standard.
It's a lot to handle.
It is. And being able to gather and analyze data to make good decisions is essential.
Through things like
Inventory management, marketing campaigns, all sorts of things. Any inefficiencies in these areas can lead to higher costs and a bad customer experience.
so operational efficiency is key.
Totally.
And then there's the issue of cybersecurity.
Right. With all the customer data that online fashion brands collect, they're prime targets for hackers.
Data breaches can be devastating.
Well, it can. They lead to financial losses and hurt your reputation.
So strong cybersecurity is essential,
It is. And then there's the challenge of finding and keeping talented people.
especially in such a fast-changing field.
Exactly. You need experts in digital marketing, data analytics, technology, supply chain management.
It's a competitive market for talent.
It is.
So despite all these challenges, the outlook for the future of fashion e-commerce still seems pretty optimistic.
It does. Despite all the hurdles, projections show continued growth in the sector.
Really?
Yeah, the global market is predicted to be worth over $1 trillion by 2027.
Wow.
And the U.S. market is also expected to grow significantly.
That's good news.
It is. And this growth is mainly because more people are using the internet and smartphones. Plus, online shopping is just so convenient.
It is. You can shop from anywhere.
Exactly.
So what are the big trends that are going to shape how we buy and sell fashion online in the future?
We're going to see even more AI-driven personalization.
Like what kind of things?
Think super tailored product recommendations, better visual search, automated marketing campaigns, and even virtual try-on experiences.
Oh, wow. That's cool.
Social commerce, where you buy things directly through social media, will keep growing too.
Yeah, that's already pretty big.
It is. And sustainability and the circular economy are becoming more mainstream.
So things like reselling clothes, renting clothes, repairing clothes.
Exactly. Those are all going to be more important.
It's good to see that sustainability is becoming more of a focus.
It is.
What else?
Immersive shopping experiences using augmented reality and virtual reality are going to change how people shop online.
Oh, like virtual fitting rooms?
Yeah, exactly.
That sounds futuristic.
It does, but it's coming. And having a mobile-first approach to the whole shopping experience is going to be essential.
Right, because everyone's on their phones.